Hey guys, so the market has been scratching their head lately, wondering why did Warren Buffett bought a small stake in Delta back in late February 2020 and sold a much larger chunk in April 2020. Then just a couple of days back, he actually sold 30 million worth of his Bank of New York Mellon stakes. I mean, shouldn't he be buying more in the current market downturn rather than selling some of his long-term stakes? Let's first analyze his airline stake sale before proceeding to his BNY sale. The sale was pretty perplexing as Buffett, shortly after his purchase of his Delta shares in February, gave an interview to Yahoo Finance saying that I won't be selling any of my airline stocks.
So it doesn't sound like you're selling airline stocks today.
I won't be selling airline stocks.
So the sudden U-turn was indeed confusing. He bought a small amount at a high price of $46 and subsequently sold a bigger amount at a much lower price of $24. Doesn't seem to make sense, particularly coming from Warren Buffett. I mean, is he losing his golden touch? Before I actually share a number of possibilities in his Delta sale, perhaps it would be useful to first understand why did he accumulate airline stocks back in 2016, when just 3 years ago in 2013, he was calling them death traps. So, Buffett says he changed his tune on airlines because he believes airlines have learned to operate with more discipline and are no longer adding capacity. After going through a bad 20th century with multiple bankruptcies and an industry consolidation that left 80% of domestic air travel firmly in the hands of the major 4 airlines, the airline industries now resemble other profitable US industries that are dominated by a handful of major players such as the grocery store industry and cable television business. In short, they are no longer kamikaze businesses. More importantly, airline stocks then were trading cheaply at 10 times PE, whereas the broader market was trading at somewhere around 20 times PE. So what did Warren Buffett do? He bought up substantial stakes close to 10% in all 4 major airlines. So now back to the question, why did he buy high and sell low in Delta? Possibility number 1. Simply put, he made a mistake. To all Warren Buffett fans out there, no offense, he might be called the Oracle of Omaha, but he sure has bought his fair share of losers in his decades of investing. He bought a small 1 million shares of Delta in late February. I mean, why such a small amount when the share price has collapsed 27% from the peak and he thinks that that's really good investment, with good fundamentals? Shouldn't he be loading up the boat? I mean, some say that his small purchase of Delta was for show. A vote of confidence before he appears on Yahoo Finance shortly after, proclaiming his love for airline stocks. And then he turned around and sold 13 millions of Delta shares at a much lower price. Well, he probably realized that the aviation environment is significantly more dire than he previously imagines. How do you actually value a company with close to zero revenue and burning $60 million a day? Yes, that is Delta for you. I mean, if this problem is confined to just a single quarter and the aviation industry can get back on track in second half 2020, might not be that bad. Again, who is to say that the airline industry will witness a V-shaped recovery the moment lockdowns are lifted? I mean, look at China. They have now closed their borders to most foreign travelers after being the first nation to recover from the COVID virus. Who knows, right? But the fact is that countries all over the world will take protectionist stance to prepare against a second wave of outbreak. And that is basically going to stifle the air travel industry in a major way. Our skies could remain cloudy for a long time to come, and air travel might never be the same again. So, the airlines are starting to ask the government for bailout money to the tune of $50 billion. So, they are now essentially asking US taxpayers to rescue them. Personally, I feel that they should just go to the capital market, and do a rights issue from shareholders. That would be more fair, right? I mean, shareholders have benefited from years and years of the company doing share buyback. And now when they need money, they ask the taxpayers to foot the bill. I mean, that seems to be how capitalism works nowadays. I can't be sure what Warren Buffett thinks at this juncture, but when Delta was loading up on debt to the tune of $1 billion and buying back shares, he loved it.
I don't know, 3 weeks ago or at some investment conference, they announced I think they announced they'd bought in 26 or 27 million shares and borrowed $1 billion to do it. Well, I like that in two aspects. They'd bought in 4% of their stock, so all of a sudden we own 4% more of Delta than we had the day before. I like the fact they were willing to borrow $1 billion to accelerate a stock repurchase program. But
I mean, why not, right? Using cheap debt to retire more stocks which has a higher cost of equity seems like the perfect plan. And that is exactly what many corporates have done in the last decade, and now finding themselves in a situation where their balance sheet is chock full of debt and they are at risk of defaulting because revenue has essentially created. I mean, why save up for rainy days when you're not compensated for it? There's definitely no incentive for management to do so, especially when their remuneration is directly linked to the company's share price performance. I will be interested to know what Warren Buffett's thoughts are right now with regards to using debt to fund share buybacks. Personally, I would have preferred using free cash flow to fund share buybacks instead of cheap debt. But it is so tough to go against the tide when everyone is doing it and reaping the gains and you're not doing it. Well, if I'm the CEO, my ass is probably on the line from my board of directors. Maybe Warren Buffett now realizes the seriousness of the situation and decides to reduce his stake in Delta. He also trims his Southwest stakes by 3% as well, and who knows, right? He might already have started paring his stakes in United and American Airlines too. We won't know until he discloses his holdings in the next quarterly update. So that's possibility number one. Possibility number two, and that is somewhat linked to the first possibility, is that the potential dilutive impact of the government bailout could be rather substantial, and that is what is spooking Warren Buffett out. An equity stake is unlikely to be the preferred form of relief which the airlines would like, given that such a move will likely represent huge dilution to existing shareholders and gives the government a greater ability to oversee the company. On the other hand, if the bailout is structured as a loan, it will actually increase the leverage of these airlines further. I mean, note that the bailout that they are receiving is not used to retire existing bank debt, but actually used to fund working capital and to actually pay the salaries of their employees, which at this moment of time, they have no revenue to do that. So that will actually add on to the leverage of the airlines further. Buffett probably realized that his stake in the airlines might be at risk of huge dilution if the government bailout is in the form of equity stakes. So, better to cut losses now than later, right? I mean, he once famously said, the most important thing to do if you find yourself in a hole is to stop digging. Is he in a hole right now? We shall soon find out. So that's possibility number two. Possibility number three is that he's just doing some housekeeping, getting his stakes down to 10% as, that's what he normally would like to see. However, he could choose to do that previously when his stakes was above 10% for Delta. Why only start trimming now at a much, much lower price? He actually bought more stocks of Delta back in 2019, even after realizing that his stock holding threshold has accidentally exceeded 10% due to the company's share buyback.
I didn't realize was that purchase had taken us over 10%, so I was already in territory that I didn't plan to get, so I just decided to buy a whole lot more stock. Once I'd lost my virginity, essentially, I thought, why stop at one,
After losing your virginity, why stop at one? Seems pretty wise word from the oracle. It just does not make sense to me that he's purely trimming to get it below 10%. If a stock is significantly undervalued, you will sell it because it is a hassle to report your stake position whenever there's a change. Just That just doesn't sound right to me. But again, who knows, right? So that is my possibility number 3. And lastly, possibility 4 is that he might be looking to dispose of all his airline stakes in preparation to do a mega elephant deal on the best ones, which has the highest probability of surviving this aviation crisis and ultimately emerge as the market leader. Back in 2018, Buffett said he would not rule out owning an airline straight, which prompted lots of speculation as to which airlines that might be. I mean, if this health pandemic extends to a much longer duration than most people might have previously expected, the bailout might no longer be sufficient and airlines might start to file for bankruptcies, which has happened many times in the past century. This could mean a further consolidation of the industry, which will bode well for the last airline standing. So that about concludes my analysis on Warren Buffett airline sales. It'll be a huge surprise to many if Buffett actually discloses in his upcoming quarterly filing that he has sold all his airline stocks and admit that he was wrong. No shame in that. I mean, he's ultimately only human. Warren Buffett also sold some stakes in BNY Mellon, about 30 million worth, trimming his stakes from 10.4% to 9.8%. Again, this could be due to some housekeeping issue, but the truth is, a key attractiveness of US banks is no more, at least for 2020. That is their ability and willingness to do share buybacks. In March 2020, 8 of the biggest US banks have stopped share buyback to aid in loans to lend to individuals and businesses affected by the spreading coronavirus. And Warren Buffett loves his banks doing share buyback. Check out this video taken in February this year.
And most of them are buying, Bank of America is buying in a lot of stock every year. So our ownership of the Bank of America this year probably will go up 7 or 8% without us spending a dime. I'd like to own any business, any good business where my ownership goes up 7 or 8% every year without me spending any money, and on top of it I get a dividend and so on. They're very attractive, both against interest rates and against bonds.
So now that this is no longer feasible, there are questions whether US banks should stop their dividend payments as well. And if we are entering into a huge recession, many businesses will fail and many loans will turn sour. Will the banks be left holding the baby, or will Uncle Sam come in to be the lender of last resort? We are already seeing that happening in junk bonds, and very soon, it could be buying up stocks by the truckload. So I think it will be very interesting to see the changes in Warren Buffett's Berkshire Hathaway's portfolio when they announce their quarterly performance in late April, early May. Buffett does have a sizable amount of airlines and financial stocks. As we enter into recession, which is almost guaranteed, I'll be curious to see how Buffett views his financial holdings, which are typically early cycle plays. A lack of any significant purchases when the market has created close to 40% before the recent rebound might implicitly imply that Warren Buffett believes the worst of this health pandemic issue is yet to manifest. I hope you enjoyed this video. If you do, please smash the like button and subscribe to my channel where there will be more interesting stock videos upcoming. Stay home everyone and stay safe. This is Royston signing out.